Hello and welcome to another episode of Wealth Purpose Peace. I'm Jonathan Hall.
I'm Brian Grant.
And we are financial advisors with Warburton Capital. And Brian, our goal with this podcast is to walk through some of the most common questions that we get asked by clients.
Yep.
And today I think we've got an important one.
For sure. Definitely an important one. One that we hear somewhat often. One we maybe should hear even more often. People ask, maybe it's just my algorithms online, but I've been seeing more of it lately.
Yeah.
Facebook, and I probably Googled it once, but we're going to be talking about life insurance and specifically kind of thinking through how much life insurance should I have? So like always, what we're going to try to do is walk through a practical framework to actually answer that question mathematically, because there's an answer, at least a ballpark for people depending on the situation. But then, as always, try to get a little bit deeper and figure out what are people really getting at? What do they really want to make sure they're protected against? It's not just money. So yeah, someone comes in, they say, how much life insurance should I have? Where do we start?
Well, like all these questions, Brian, the answer is uniquely personal. There's no one perfect right answer or dollar amount for every single person.
Yeah.
But there are a few frameworks that we can think through. And working with a professional can help you make these frameworks more specific to you and what you're trying to accomplish and your specific family dynamics.
Yeah.
I think a good place to start is looking at your income. So number one, how many earners do you have in the household? Is it one? Is it two? And then thinking through the income that each earner brings into the home. Because we have to do life insurance typically on one life. You can do life insurance on two lives, but that has kind of a different purpose. And I think it's worth noting before we get too far down the rabbit hole that in today's episode, we're really diving into life insurance that covers an individual's life to help protect their family. Life insurance can have other purposes. It can be used in irrevocable life insurance trusts for ultra high net worth estate planning. It can be used in business transition planning with a buy-sell or key man life insurance. Those are all worthy topics, but today we'll kind of focus in on that.
Yeah.
If we think about someone's income, a decent place to start is 10 to 12 times their earnings.
Yeah. Yeah, it's a common metric you'll hear thrown out. And it's not bad. If you have no life insurance today and you got that number, if you make 80 grand a year and you got 800 to $1 million in life insurance, you'd be much better off, right? You would at least be closer to the ballpark you might need to be in. But I think before you even get to the number, you brought up a good point. It's like, what does my household look like? If you're single, you have no dependents, maybe you need nothing or just enough to, help pay for funeral expenses and take a burden off your family who otherwise would be responsible. So I start with the household. Who are you looking to protect if you were to pass away? But then, 10 to 12 times your income you'll hear thrown out. I think there's a more specific, way that you can think about it though. And that's what we want to walk through is how can I get that a little bit more tailored to my situation?
Sure. The income replacement idea can start to fall apart. If you're a young wealth accumulator starting out, maybe you're earning 100 grand. Let's make up a number.
Sure.
10 times that, $1 million bucks, kind of makes sense. But let's say you're a wealth accumulator that's earning $500,000 a year. Do you need 5 million? You may have other assets. So that's where this more specific framework can be helpful. The acronym, it's easy to understand.
Yeah.
We're talking about life insurance is life, L-I-F-E.
Yep. Yeah. It's a simple framework, simple enough even we could remember it. But it's really helpful because I think to your point, we're not talking about permanent policies here in most cases. We're talking about a term life policy. It's cheap, it's affordable, it's immediate protection for your family. The theory being by the end of that 10, 20, 30-year term, you've saved and you've accumulated enough assets that your balance sheet looks good enough. If you were to pass, God forbid, then you don't need the life insurance. You have enough stacked up in the way of assets that your spouse and your kids are going to be fine. But this helps you think through that now because maybe specific goals we'll get to in this acronym you already have saved enough for that you can reduce that part of the life insurance number a bit. So I guess let's walk through it. Let's start with L. L is liabilities. So how do people think through this is what my balance sheet looks like on the liability side, and how do I address that with life insurance?
Sure. That one, thankfully is pretty obvious. If you sit back and tally up all the debt that you have, that your spouse or somebody else would still have to be able to pay off if you were to pass away. So if we take a big giant step back, what are we trying to do with life insurance? What are we trying to do with life insurance?
Yeah.
Man, like if you're an earner for your family, you're producing all this money that your family's living off of. There's kind of a net present value of you and all your future lifetime earnings.
Yeah.
And so we're trying to, if in a God forbid scenario, something happens today, we're trying to capture a bunch of that, and for the purpose of making life easier for the people that you leave behind, at least from a financial perspective, to not add additional burden. So one of those burdens, of course, is debt. So you add up your mortgage, right? How much is on the mortgage? Wouldn't it be nice to have a paid off house so that we don't have to move? If we've got little kids at home, that's what I think through when I think about my life insurance. I want my family to be able to stay at the home and pay off the mortgage pretty easily. So having that as the first component is important. Here's a little nugget, a little takeaway, something to think through. If you have student loans, we work with a lot of clients who are, younger physicians or younger attorneys making great income from their jobs, but still maintaining a student loan balance because it just takes time to pay it down. If you've privatized any of those student loans or refinance them through a privatized structure, a lot of times that debt follows you after you pass away. So check with your specific provider that you have your loan through if that's the case. But if so, you got to make sure that those debts either go when you pass away, or if they follow you, that needs to be included in that life insurance number.
Yeah, exactly. No, it's a great point. The mortgage is the obvious one for most people. We don't want especially if you have young kids, have to be uprooted and moved forcefully, change schools, right? I mean, so there's some value there. The problem, you made a great point about student loans too. The other thing is, if you decide to use part of the life insurance number to pay off some of these liabilities, theoretically that frees up some cash flow every month too, moving forward. And so you'll need to factor that into your math for the next one, which is income replacement. So we're still kind of back to that initial 10 to 12 times income. It's still part of the thought process because it's important. And there's not a right or wrong in this case. You got to think through it. So I think your point first about, do both spouses work if you're married? Does only one work and the other stays home with the kids? Do they both work and make the same amount? Is there a big asymmetry in earnings even though they both work? Those things all change this number. And then think through, do I want to just give them a few years to kind of, deal with things and get back on their feet? And they've got 3 years or so of the life we've been used to, and then they'll figure it out by then. Or am I trying to make it where I can have enough that they can throw in a portfolio and pull 4 or 5% off of, and that kind of replace the need for them to work, especially if I've already solved for the mortgage going away and these other loans going away. So maybe instead of $8,000 a month, $10,000 a month to live, now it only costs us 6 or 7 because I've paid for some of these debts to go away in those debt payments. So income replacement is one to think about.
Absolutely. One thing I'll throw in here, we'll make it through the whole acronym eventually, but one thing I want to throw in is thinking through life insurance for both spouses. So
you made this point the other day when we talked about it, and I thought it was I'm glad you remembered to bring it up.
Yeah, it's huge. I mean, okay, so you mentioned a couple different potential ways a household could be aligned in terms of income. Let's say there's a household with one primary earner and one spouse that stays at home with the children. The spouse that's at home with the children produces a lot of economic value for the family. They may not be getting a paycheck, so to speak, though maybe they should.
Yeah, my wife is way underpaid, she would tell you, and she's right. No, but that's a great point. They might not have an income that you need to replace in a literal sense where it transfers, but there's going to be a lot of expenses that you now have to incur if, God forbid, that person's gone. And you have to figure out, how am I going to get the kids to school every day? Who's going to pick them up? Or does that mean I can't work because I have to do it? Now that income's gone. So you're right. It's not always as simple as, well, they made 100 grand a year. I need 100 grand a year for 5 years. Sometimes it is, but think through it. That's a great point.
Yeah. Childcare. Would you want to outsource things at the home?
Yeah. Cleaning.
And then also, what do you think your life looks like after that? This is kind of a morbid topic.
Yeah, it's not the most fun
fun,
but it's useful. And I think it's crucial because crazy things happen. And statistically, it's like, I've heard people say, well, I feel like I'm just throwing money away. And it's like, yeah, I mean, hopefully right?
So.
Hopefully for 20, 30 years, you throw money at this and you never use it, because the implication of using it is worse. But it does bring a lot of peace of mind, at least for me, to know that, hey, it's going to be difficult if something happens to me, I'm sure, hopefully. But I at least don't need to add to that. I've at least provided for X, Y, and Z.
Yeah.
So let's keep moving. F, final expenses. So funeral, taxes, cleaning up any last minute estate things, any costs there. So think through final expenses. Funeral.
That might be the biggest chunk of mine.
For you.
I want to have a big party.
You want
if something
parade. If you televised parade.
Yeah, absolutely.
So your number's higher. Some people just want a pine box and some dirt.
Yeah.
But think through what you want. I don't know. I mean, that's different for everyone. I don't have a grand plan. Haven't thought through it. I probably should. But think through what you want that situation to look like for you. At least have an idea of what a basic situation would cost. You can find that information out pretty easily.
And then E is education / extras. So if you do have children at home and you are thinking through, okay, if something happens today or the day after I get the policy, then, what type of educational setup are they in today? Are you paying for private education? Are they in public education? What type of expenses do they have today that you would need to replicate? If they're 5 years old and they've got all these years of private schooling you'd like for them to go through, that needs to be included.
Yep.
But then the big one's college. So thinking through, how much do we think college might cost? That's something we help clients think through all the time. Is what type of college expenses are coming down the pike, how much that's inflating. And that's a useful thing to include in that LIFE acronym.
For sure. But this is a big one where maybe some people can go back to the balance sheet and say, okay, I want to pay for college. I've got 3 kids. They're all going to go to a 4-year school. I don't know where yet, but I can get a round number, get in the ballpark. But I've already got 20 grand in each of their 529s. And that's going to grow, and that's going to get here. That's going to cover half or 3/4 of it. So maybe that number that needs to come from life insurance to fund that goal is already partially covered by what you've got in assets. So think through that. So that's a really good, simple framework people can start using to think through how much they need. I think the other thing that keeps people from it a lot of times is they're worried about the cost maybe, but term life in particular is cheap. It's typically cheap. I mean, if you're young, have no diagnoses, you're in your 30s, you're healthy, you don't smoke, you can probably get a $2 million policy for 20-year policy for $75 a month. I know people who have gotten policies like that. That might be a little more if you have certain diagnoses, but it's going to be cheaper the younger you are. The other option, I've heard you talk about this with clients that I think is really smart, is the idea of staggering policies a bit in terms of term and maybe even dollar amount of each policy. And that can reduce premiums too. So I don't know if you want to talk about that a little bit.
Sure. Yeah. This is frankly where working with a professional can be helpful because there are strategies to how to layer life insurance coverage, how much you have, comparing that with your assets, and then also thinking through the amount of money that you need in retirement as part of this too. If you're getting closer to retirement, now those retirement calculations start to feed into our life insurance number. And then if we need this benefit and comparing it to the assets that we have. So it can get muddy pretty quick.
For sure.
To your question, the staggering of policies might make sense if you think about it. The more assets that we have, the less we really need in life insurance.
Sure.
Right? Because we have things in the bank, in the brokerage, we have equity in the house, we have our business that we own.
Yeah.
And as our assets accumulate, as we age, assuming that they accumulate, they grow, we pay down debt, then we actually probably need less life insurance.
Right.
But it's going to be cheaper to buy life insurance when you're younger and have a longer term typically than it would be to buy it when you're older and have a shorter term.
Sure.
So you can think about, okay, if I need $3 million in coverage, I've used the life acronym, I've got a mortgage, I've got this income replacement.
Yep.
I want to have the biggest party ever for my funeral. So we need $3 million of coverage.
Yeah.
Then, okay, let's get a 30-year policy that's $1 million. Now let's get a 20-year policy that's $1 million. And let's get a 15-year policy that's $1 million.
Yep.
I'm 35. After 15 years at 50, maybe I won't need that million in coverage and I'll still have two.
Yep.
And that's one way to think through how you can stagger policies to help spread the premiums out.
Yeah.
And also make sure that you have coverage for that entire 30-year term.
Yeah. No, I think it's a great way to tailor it a little more specifically. Your net worth probably isn't going to go from flat line to $3 million at a certain age, right? It'll gradually increase, and then therefore the dollars you need in life insurance decreases. So I think gradually replacing those is a smart way. That's staggering policies.
And I want to point something out too. I think it's relevant at this part of the conversation. It's the concept of insurability. So we don't sell life insurance at Warburton Capital. We're really fortunate. We get to take a look at the life insurance question without having to think through like selling products, right? We get to look at it as fiduciaries, keeping our clients' best interests in mind.
Yep.
And one of the areas that I think is worth noting is, like you said, life insurance is cheaper the younger that you are.
Sure.
I think the need is higher the younger that you are.
Yep.
But then B, there is something to be said for having life insurance insurability locked in when you're younger. Yeah. That's really the best argument if you think about life insurance for children. It's a kind of a morbid concept.
Yeah.
But the thought of buying them a policy when they're totally healthy, there's nothing bad on their health history that might keep them from being able to get insured down the road. Yeah. And there's an argument to be made for that. But the same goes for the adults. You know, if we're just kind of using ourselves as examples here. 35, 3 kids. But if you're 35 and have a clean bill of health and decent labs and no big diagnoses, it's not the worst time to buy life insurance, because the moment a test result comes back, even just some labs that come back and something doesn't look totally great, you're just starting to age a little bit, one too many hot dogs, and then the cholesterol spikes, that can affect your insurability and your cost.
Yeah, cost and ability to get coverage at all. So that's a great point. The last thing I'll throw in, it's kind of random, but I don't want to forget to mention it. Typically, having just group term through your employer isn't enough, right? If you leave that job, that coverage goes away. To your point, what if something happens throughout the year and you become uninsurable, and now, you only have this coverage, and if you leave this job, which you want to for other reasons, you can't get a policy at all. And
it goes up every year. Exactly. It's a 1-year term policy every single year.
Exactly. So it can be a nice way to relatively affordably chunk a little extra on your other policy if you want or need to. But I think have an independent outside policy is what we're talking about here.
So let's take a second and dive into the question behind the question. I think it's pretty obvious here.
Yeah.
Is my family going to be okay if something happens to me?
Yep.
And we've had the honor and the privilege, really, of helping families through big transitions like that, where one spouse passes away or has a bad diagnosis. And you look at that, we've had it happen at basically every conceivable age.
Yep.
We work with enough folks where we've just gotten to see it. And I will say that there's a huge element of peace, because again, the whole point of this talk is we have our wealth, we define the purpose behind our wealth or the purpose for our life insurance, and then that brings peace. the peace that comes from knowing that you have a plan if something were to happen, frankly, I think working with a professional is pivotal in this standpoint.
Yeah.
If there's one spouse that's dealing with the finances and one spouse that's a primary earner, or even two that are earners, but one's kind of taking the lead on investments, then working with a professional is your backup plan.
Yep.
How many spouses have we sat with during that awful time? I mean, we're one of the first 5 phone calls, I think, that people make.
Yep.
And the question they ask is, my whole life has changed. Am I going to be okay?
Right. Right. And they're trying to figure out passwords to everything and logins and how did the other spouse do this? And so, yeah, working with someone who can help you through that transition is huge. We've had to do it. It's not, it's a sad on our end too. It's not enjoyable, but it is rewarding to be able to help somebody navigate that transition, because it's really difficult amidst the obvious emotional distress to then figure out how all the finances worked when you weren't the one focused on that necessarily. Yeah. So, but having the life insurance there is a huge, I think, burden off of the surviving spouse's shoulders.
The conversations are much different.
Yeah.
When someone knows that they're financially secure.
Yep.
Because you might be younger and have a $2 million net worth, and that might feel like plenty of money. I don't need life insurance. Man, life's expensive. Mm-hmm. And if you have a lot of years of earning left, that's a lot of potential future economic value that your family's not going to have now. You might even need more life insurance.
Yep.
Right? So working with a professional, thinking through your specific family dynamics, I think is really pivotal. And then I'd like to give an admonition to the
big word podcast.
To the viewers. I'm going to look right at the camera.
Okay.
Are you ready? Okay, here we go. If you don't have life insurance and there are people that are counting on you, get some life insurance. Okay. I don't sell it. You just need it. Mm-hmm. If something happens to you, like today's the day. If you were looking for a sign, this is a sign. You need to go do it. Yeah. Even if you just use the 10 to 12x annual income and go buy some term policy real quick, a term policy real quick for a little bit of benefit, just so that there's something there, do it.
Yeah.
That's important.
Something is better than nothing. So start somewhere. Work with someone who can help you get to the right number, even if that's after you get a small something. But also you can on your own go ahead and start. It takes probably 15 minutes to go through that life acronym and think a little bit. And you probably will get to a pretty decent number of what a professional could help you work to. But yeah, partner with someone, get coverage in place, and figure out what you want your situation to look like. God forbid something happened to you. And I think you can get to a good spot with life insurance that you feel good about.
So liabilities, income replacement, final expenses, education and extras, LIFE.
That's it.
Okay. So there's your homework, everyone. Go do that.
Yep.
This episode had an admonition in it.
We're going to have to see if we can do that again. I don't know if we can.
Absolutely.
Yeah.
Well, it's a heavy topic, but it's an important one.
For sure.
So, all right. Hope you've enjoyed this episode. We'll look forward to talking again soon.